Welcome to the Let's Talk BS podcast. I'm Bryan.
And I'm Sofia, and we're coming to you live from the
757.
Good afternoon, Bryan.
Afternoon to you too, Sophia. How you doing?
I'm doing good. How are you?
I'm doing great. You know, I'm counting down the days,
Man, It's been a minute, right?
Yeah, it has been a minute. It's definitely been
2 weeks?
2 weeks, yeah.
Yeah, the holidays.
Yeah.
We went in for the holidays, so we couldn't record that week.
Yeah, we did. Yeah, and today was even difficult too, maneuvering some stuff around. So that's why we're here in the afternoon versus the morning when we typically record. So
Very true. Very true.
So
but all for a good cause, right?
Yeah, there we go.
All for a good cause.
Absolutely.
So, how was your Thanksgiving?
My Thanksgiving was great. You know, It's my. I know a lot of people, I think most folks say Christmas is their favorite holiday. I would actually say Thanksgiving is my favorite.
Mm-hmm.
I had a great time. You know, it's always good to kind of, kick it with your family. I know me, myself, even though my family is here locally, I talk to them, probably not as much as I really should, and so just to kind of be able to relax with them. My folks stayed at my house for a couple of days during the holiday. They even went down to our beach house for the anniversary, because my parents' anniversary is actually the day after Thanksgiving, and they've always had to sacrifice the anniversary because it's always been like, Thanksgiving, and the next day they're either relaxing or like we would, go, do shopping and stuff like that, when we were younger or whatnot. So, this year they was able to kind of enjoy it themselves. But Thanksgiving was great. Like, we had a good time. It was, my parents came, Brooke's mother came, her aunt, cousins came, their kids, my sister came, her boyfriend came. Brooke's brother came, so it was good. We had a really, really good time. Ate a lot. I was responsible for the turkey this year since we were hosting at our house. So I made 2 different turkeys. I smoked a turkey and I fried a turkey. This was my first time ever smoking a turkey. I fried one several times, but both of them were really, really good. Like I got, good response from both of them. Everyone ate it pretty, they liked both of them. I think people like the fried better. I do like the fried turkey better as well,
Anything fried is good.
Yeah, it is.
You can deep fry an Oreo.
Yeah, it's good. It's funny, my kids, I had, after I fried the turkey, the peanut oil was still hot, and they were like, we had like tater tots, and I love tater tots. That's one of my like favorite things. And so they were like, Dad, we want something else or whatever. Like, so I dropped some tater tots in there, and them joints was really good. Like, it's funny, like, we're going to go over probably in a second, like, what we all ate for Thanksgiving and, like, what our favorites were. But the tater tots was a hit. Like, the kids loved them. Even adults were sitting there popping them joints in their mouth and talking about, this joint's good, Bryan. These good. And, like, so, all I did was, it was frozen tater tots. Just dropped them in there. But it's, the peanut oil after it's been going for a couple hours, it make a lot of stuff taste good.
Yeah, so, it's probably the seasoning from the turkey kind of mixed with the peanut oil, and then you fried the tater tots, so it just was like an infused concoction.
Yeah. And I threw like this little seasoning salt that I like on the tater tots once they came out too. So I'm pretty sure that helped as well. So it was good, man. We had a great time.
So speaking of fried, have you ever had fried ice cream?
I have, at a carnival. I did, I had it at
I'm telling you fry anything.
Yeah, you're right. I had it at a carnival. This was I was probably like high school. It used to be, anybody here that's listening locally, you always remember, I'm pretty sure folks remember the Military Circle Mall used to have this carnival every single year during the summertime for like a month, where they had it every single day, and everybody used to go like on Friday or Saturday. But the crazy thing about it, that carnival was dangerous because everybody would end up fighting, shooting at this carnival because it was just so wide open. There wasn't nobody like, checking to see if you had, anything on you or whatever, man. But at that particular carnival, I had fried ice cream. I remember like it was yesterday. So
one time I went to the the black circus? What is it called?
Oh yeah.
You know what I'm talking about.
Yeah,
so
that was in military too.
Yeah, no. I went to the very first time that I've ever went to that particular type of circus was here at military.
Yeah. So you know the vibe. Yeah, that was What was the name of that joint? I went there like 4 or 5 times. I went there pretty often. Like
I took Maya. So,
you did? Okay.
Yeah, this was before Jada was born, all that stuff. So, or maybe Jada was a baby. Yeah. She was like maybe a year or 2. She didn't really even know what was going on.
Yeah. It was a good time. I actually remember, I want to say one year, because I'm pretty sure they did it when you went as well. One year they picked me. Like, I guess you know how they pick people in the crowd to do stuff sometimes. They picked me, and I was like, nah, I ain't messing with it. So they ended up going to somebody else.
Yeah, I remember that part.
Yeah. They would actually have you come out. I can't remember what it was.
Matter of fact, I was pregnant with Jada. Now that I think about it, I got pictures of it. I was actually pregnant because I feel like they did pick us, but Maya was scared to go out there. And I was pregnant, so I was like, I'm not going out there for sure.
The Soul Circus, that's the name of it. I told you it was going to come to me. I knew it. I just had to think for a second. Yeah. It was a Soul Circus, yeah. But yeah, they called me too, and I was like, nah, y'all ain't going to make me look crazy. Because I was like 20, 21. I was trying to be cool and all that. So I was like, nah, I ain't going to go out there and be doing nothing. I think I was like on a date with a girl or something like that at the time too. So I was like, yeah, y'all ain't going to have me out here looking crazy.
I definitely, if I wasn't pregnant, I would have went out there and acted a fool.
I'm normally a team sport like that, but back then, at that time, nah, I'm good. Yeah, I'll watch. I'll watch.
So
but how was your Thanksgiving though? I know you said you had a lot going on the last time we talked. So how was it?
So it ended up being really good. Me and my family, we ended up going up to Alet, Virginia. My cousin, he recently just purchased a new construction property up there. So he wanted to conduct or have Thanksgiving at his home. Okay. So we all went up there. He cooked pretty much everything for the exception of the mac and cheese and the yams. Okay. So when I walked in the house, he was like, "Cuz, can you make the mac and cheese?" I was like, "I came up here to relax, man." But I ended up making it, obviously. And then we just listened to music, play games. I got a chance to play spades. Oh, my gosh. It was like this feeling inside that was just filled with, like, bright lights, sunlight, flowers. I was so happy. And we killed them, too. That made it even better.
So who was who? You said we killed them. So who was the teams?
It was me and my cousin, and then it was against my husband and my other cousin. Okay. So, yep. So we played opposite teams, me and my husband, and then me and my cousin, when it comes to the spades table, we just a dynamic duo.
Y'all nasty with it. Okay.
Yeah. So we could talk to each other without talking to each other.
Okay. But that's key. In spades, you got to be on the same page with your partner. Like you gotta, like if you like you said, it is like a rhythm thing almost. Like you know what, like when they throw a certain card out, you know what that means. Yes. You know what I'm saying? Like without even talking, like you know if I'm throwing off, if I'm just trying to do this, if I'm whatever, like I'm trying to feed you, or if I'm just trying to like table. When you nasty with it, when you got good chemistry with somebody, it's a dangerous combination. So that's cool. It
was funny because it's the one particular scenario where I think I was cutting clubs, he was cutting hearts, and I had a hand full of hearts, and he had a hand full of clubs.
Feed him. I'm gonna feed you, cuz.
Every time
and then you know when they about to go out, and then you come back. Yep. Yeah, man. I know that game very well. Yeah, man. Yeah.
My cousin and my other cousin was just sitting there looking like, what the heck is going on?
Because when you're in that situation, there's nothing you can do. You just gotta sit there and look at the cards and drop on the table. You see the hand, whoosh, whoosh, just keep going back and forth that way. You just sitting here like, dang, like, you know what I'm saying?
Exactly. Yeah. Man, it was funny. It was a fun time. And then so we ate, then later that night we actually came back because my husband had duty on Friday. Mm-hmm. So then I end up hosting the day after Thanksgiving celebration that I have every single year. You saying that was
a big thing you guys do, right? Yeah.
So we did a fish fry. We had etouffee. We did a shrimp fry, and then I made like a big chef salad just to kind of, offset all that fried food. And the etouffee, we made it with rice, but you can also make that over like a mashed potato too.
Yeah.
What else did we do? Oh, we played games. We got some spades in. We played Phase 10. We played Uno. We had the kids playing bingo. We played Drunken Lyrics, but the more clean version of that. We watched a movie. We ended up watching like a Hallmark. It's called The Christmas Calendar, I think, or something like that. Oh yeah,
that's a good movie. I seen it with your girl in it. Yeah, I know, but
light-skinned girl.
Yeah. Mm-hmm. Vanessa Hudgens. Hudgens. Yeah, Hudgens. Yeah, I know exactly what you're talking about. That's a good movie. She ended up, the dude the whole time was doing it. She didn't know who it was, and it was him, like the guy that was with her all the time. Like, you know what I'm saying? That was fire. Yeah, I seen that before. It's fire.
Yep. Diddy's son.
Yeah. Diddy's son. Yeah.
Well, that's how the night ended, and what else did we do? Of course, we drank. I mean, that's. That's a given,
Hey, look, me and my dad, I'll tell you what, because he came over Wednesday, Yeah, he came up Wednesday, and because he brought another turkey. So I initially we were supposed to just make one turkey, but then he was like, son, let's try smoking a turkey this year. So I was like, all right, cool. So we ended up doing 2 turkeys. But me and my dad, like on Wednesday, like I was thinking like, yo, because we had a whole bottle of Hennessy Privilege to ourselves, me and him, and then we just drink our stuff straight. So we had a whole bottle, and then he had seen in my bar that I had Remy XO. So he was like, because I had that was the only I had bought that bottle purposely because my dad all he drinks is Hennessy. So so once we went through that before Thanksgiving, I'm like, dang. So I'm like, yo, Pop, you got to try this Remy. It's pretty good or whatever. So we had like a little bit of that same night, and then that's all we drank the next day. You know what I mean? So I was like on one. Like, I mean, I wasn't like crazy, but it just because cognac. When I drink cognac, I mean it. I feel good. Like, you know what I'm saying? I feel real good. But it's just like, I was like real good. You know what I'm saying? So it was just like, yo, you know what I mean? But yeah, so it was for me, we drank too. We had a good time. Played games, like you said, as well. No spades, but some card games. We played pool. I have a pool table. So that was pretty cool with my sister and her boyfriend. They get very competitive around the pool table. So that was pretty cool as well. But we ate, like I mentioned earlier, turkey, your usual suspects, ham, not mashed potatoes, collard greens. We had macaroni and cheese, dressing. We had potato salad. We had deviled eggs. We had all different types of cakes. My sister makes this real banging like Rice Krispie peanut butter chocolate like crunch. It's really, really good. Like she actually made one for me. Brooke actually made 8 sweet potato pies, which I thought was kind of like a lot, but like literally all of them were gone by Friday.
That's crazy.
Yeah, it was actually a hit. A lot of people liked it.
I haven't made a sweet potato pie in years.
For real. Mm-mm. Yeah. I love, like I said, because sweet potato pie is one of the things where I literally probably only eat it. Like I'll eat it, obviously, during Thanksgiving, and then I may eat it again between now and Christmas, maybe one more time. Because sometimes I've been around where people have made them like around Christmas as well. But typically, I mean, that's the only time of the year I eat them. So it's like when I eat them, I go hard on
eat
them.
them.
Yeah, you know what I mean? So like it was good. I had put a little poll on it was fun. I put a little poll on Instagram about the eating of sweet potato pies. Like, when do you eat it? Is it something that you eat for a dessert, or is it something you eat for breakfast? And it was funny. Yeah, it was fun. I got so many responses, but a lot of people were saying the exact same. Some people was like both of them.
Yep.
Some people was like, breakfast has no boundaries. You can eat it in breakfast or dessert. It don't matter. Because I just thought, I know how sweet potato pie kind of is probably looked at as a dessert, but I actually like it better in the morning. You know what I'm saying? Like, so yeah, that, I mean, that's.
It don't matter to me. It depends on how I'm feeling. If I wake up wanting to eat sweet potato pie that morning, I'll eat it.
Yeah.
But see, me, I don't make sweet potato pies. I'm not a baker.
Yeah.
I am a baker, but I'm not a baker.
Oh, that's crazy. Last name. Look at you, throw bars. I am a baker, but I'm not a baker. Was cool.
So with when it comes to baking, that's just not my thing. Even though I know how to make the pie, it's just not my thing. Yeah. It's not something that I get the warm and fuzzies about.
Correct.
So I go to Walmart and get a patty pie because that's where they sell patty pies. I'm not a Walmart shopper for the most part, but they sell that patty pie, so I go there and get it. And you pop that thing in the oven, it tastes pretty good. So
yeah. Real quick too. I wanted to bring this up. Speaking of Walmart, here locally, right before the holiday, I think it was that Tuesday night before Thanksgiving, we had a tragic incident at the Walmart that's right there in our backyard here in Chesapeake. The one that's connected or right in the Sam's Club shopping center, or Sam's Circle shopping center. So definitely just want to send my heart, my heart, love, and prayers out to the families that had lost loved ones during that time, especially during Thanksgiving, especially just the way the situation happened with, a person just kind of like, losing it and going crazy and shooting some folks, man. And, I mean, it's just crazy when you have stuff like that happens and, it happened really in your backyard, like literally a place that I haven't been in a while, but I mean, I used to frequent it a lot. I know, Sophia, you live right near there. So it was tough, man, hearing that. And it's like, it's even crazier to me because it's like, it was such a crazy incident that happened and people lost their lives, but it actually happened so many times that it's like, I'm numb to that type of things right now, which is very, very sad. So just wanted to make sure I mentioned that today. Didn't want to bring the mood on the podcast down, but I definitely wanted to send my thoughts and prayers out to the families that were affected in that tragic incident.
Yeah, that was very sad. I mean,
Yeah.
I didn't go to the store for the whole weekend. Look,
Yeah.
No, I did end up going to I wouldn't go to a grocery store. So I did not go to inside of a Kroger, a Target, anything,
Yeah.
because right after that incident, it was like this made up incident that now, Target was being targeted.
Yeah,
So
the very next morning. It was
so
going around. Somebody had guns in Target or something
I said,
like that. Yeah.
you know what? I'm just not going into grocery stores. This is not the place that I'm gonna go to this weekend. So
Yeah.
I actually haven't been in a grocery store. I've just been doing grocery pickups.
Yeah.
And I'm scared like that, so
Yeah.
I just don't deal with type of stuff like that. So
Yeah.
when it comes to shootings and people having guns and stuff like that, so
Yeah.
yeah, so let's see. That the day after, we played all the games, ate all the food. We pretty much had all the same food, except for the exception of y'all had way more dessert than we did.
Yeah. Had a whole bunch of dessert.
And we did not do potato salad, but we had almost identical everything else.
Okay.
So yeah.
And I was going to ask you, I remember the last podcast I had mentioned, because you had a lot of food at your cousin's house and then you came down and even made more food. Was there like a lot of leftovers at your
No,
cousin's
actually.
house? Or did y'all
So
pretty much run
my
through most of the food?
nephew came in town with his 2 kids, and my niece came in town, and so we had brought leftovers. And when they got there that next morning ish, like brunch time, 11, 12 o'clock in the morning, they ended up eating some too. So
Okay.
it worked out perfectly.
That's
and then
cool.
when I cooked and did the fish fry later in the afternoon, I mean, that was kind of like dinner. So
Okay.
it just worked out to where I didn't really have that many leftovers. I had a lot of styrofoam, like
and
plates,
stuff, yeah.
the ones with the cover on it in the
Yeah.
refrigerator. But once I cleaned out the refrigerator and I opened them up, I mean, it was scraps in there.
Gotcha.
Pretty much everybody had eaten everything. So that was good. I didn't have to cook for the most part. I didn't have to do too much cleaning. All I did was throw out styrofoams. I didn't have to wash dishes from all that. I mean, it was a blessing.
Yeah,
It
I had
was
the
a good
total
time.
opposite. So
But
I had a
Christmas,
whole bunch. I had
it's
a
gonna be
whole.
different,
Oh
I
yeah,
know.
I had a whole bunch of leftover food. We always do. That's just what we do. We overdo it. So we always cook way too much food. So I had a whole bunch of leftover food I ended up throwing out. It was crazy. I think, let's see, Thanksgiving was Thursday. I think I mentioned it last time, I normally eat Thanksgiving food, man, honestly, like for like a whole week after. Like I'll make ham sandwiches, turkey sandwiches. I'll, change the appearance of the Thanksgiving food, but it's still the Thanksgiving food. But this time, and I got sick of it, like, or tired of it, like, quicker. Like literally the next day, Friday, like we ordered a pizza.
Yeah.
Yeah, Friday night, like I had
a fish fry.
Yeah, I had ordered a pizza. The kids was like, hey, they wanted pizza, and I'm like, you know what? First I was about to say, no, we all this food in here. We gonna eat this food. I was like, you know what? I kind of want to switch it up too. So we ordered a pizza Friday. I went back to eating some more of the Thanksgiving food Saturday, but after that I threw it all. Every Sunday was like, that's what we did, cleaned up. A whole bunch of cleaning up. Did a lot of actually cleaning up that day of Thanksgiving, as far as like, putting the food away and boxing and putting in places where it could fit in our refrigerator. But yeah, Sunday we got rid of everything.
Yeah.
Like everything.
And that Sunday was my brother's birthday.
Oh, okay.
So, yeah.
That's what's up. Happy birthday.
So on when it comes to my family dynamic, I'm my dad's only child, but on my mother's side, I have 2 siblings, an older sister and an older brother.
Okay.
My older sister is like 20 years older than me. My older brother is like 10.
Okay.
And so he just had a birthday.
Okay, cool. That's what's
Yeah.
up. Was he here with you? Was he in town?
No, he didn't come. He's like a nurse.
Okay.
So they have it's crazy, man. His work schedule is love, but the only dynamic about his work
Like
schedule,
days on, days off, right?
Yeah.
And that kind of how it goes? Like 4
Yeah.
days on, 3 days off or something like that? Or
it's
nurses?
3 days on, 4 days off.
Okay, yeah.
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 However, your schedule is set for the year, right?
Okay.
So it's like this Thanksgiving, his weekend, he actually worked the weekend, so he wasn't able to come
Okay.
because that next day after Thanksgiving he would have had to go into work.
Gotcha.
As opposed to if it was his weekend to not work, he would have had Thanksgiving off plus the weekend off.
Okay.
Yeah.
I see what you're saying.
Yeah.
Yeah.
So he didn't get a chance to come, but he did have, fun. He lives in Texas, so
Okay.
he did his thing over there.
Cool.
Yeah. Yeah.
That's what's up, man. Sound like Thanksgiving was good for both of us. That was cool.
And then I went to a dinner party. It was my daughter's friend's birthday. We went there on Wednesday. It was her birthday.
Okay.
All y'all Sagittariuses.
Yeah. My birthday coming up. Today's the 2nd. My birthday is this Sunday, the 4th.
Okay.
You know, so I'm definitely looking forward to it. I turned the big 36, so, you know, everyone's saying that I'm closer to 40 now, you know what I mean? Which is, it's okay. I didn't need you to,
oh, sorry.
You know, yeah. But yeah. So, yeah, I'm closer to 40 now. So, yeah, I feel good, though. I feel like a spring chicken. So I feel really good. I'm excited. You know, today, actually, which was pretty dope, Brooke, she threw a surprise birthday breakfast for me, which she told me the other day. She said, it was yesterday, before yesterday, she was like, hey, I know you normally record your podcast on Fridays. She was like, I wanted to take you to breakfast to be in the biscuit. She was like, I was like, all right. Well, I was like, well, we got the podcast. She was like, well, see if you could push it back or whatever. I was like, all right, cool. So that's why we're recording a little bit later today. But so I'm thinking it's just me and her. So we get there this morning, and it's funny because they messed the surprise up, which was, you know, she, like, the lady was kind of, like, she was kind of embarrassed by it. But we walked up, and then we were like, hey, you know, table for two. And then Brooke had said something. It probably was like a code word or something. She said something to the lady, and she was like, oh, you're here for the surprise birthday. And I was like, what? I was like, what? And Brooke was like, oh, my God. And the lady was like, oh, you're the birthday boy. I was like, yeah, I guess I am, aren't I? You know, and so, yeah, so the lady was like, oh, my God, I'm so sorry. Like, she felt really, 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 really bad. So I was like, I mean, I knew, I guess, at that time now, there was a surprise for me.
You were still surprised, though.
Yeah, I was surprised up until that moment. Yeah, absolutely. Yeah, I had no clue. It was totally off my radar. You know what I'm saying? So,
that's too funny.
Yeah, so it was a couple of my buddies and their wives there, so it was pretty cool. You know, but shout out to the Saddies, man. And, you know, the other one, Jay, Hove, you know, December 4th, baby. Yeah.
Is that, hold on, wait, is he a Sag too?
His birthday is December 4th.
Oh, wow.
The same exact day. The exact same day. Yeah, that's my guy. He has
that's
a song.
Crazy.
So he has a song called December 4th that I play every single one of my birthdays.
Oh,
like,
okay.
It's like that.
Dang.
Yeah, it's like that.
Okay.
Yep.
Well, moving on.
Yeah.
No, I'm just kidding. But I guess your birthday brought on a lot of news in the market. You know, it's a lot going on right now. We got good news, we got some mediocre news, and we got some not so good news.
Yeah.
There's a lot of things happened here in the last month or so. But,
I mean, this is the time of the year.
There's a couple things that's actually happened in the last like 24 hours.
I mean, it's normally this is the time of the year where you know, they start to make some adjustments going into the new year, right? Mm-hmm. So they see kind of how things played out for the greater part of this year, and they always try to, you know, plan ahead and try to prepare for the next year. So, yeah, one of the big things that came out was the conforming loan limit increased, which is really, really cool. So what that is that, you know, here in the Hampton Roads area, there's a certain loan limit that they consider to be the conforming loan limit. And then once your loan amount is above that amount, it's considered non-conforming or jumbo. And so that amount was, I think it was $647,200.
That's right.
And I believe now it's $726,200, if I'm not mistaken. It'll start that way in January of 2023. And so what that means is that just gives, you know, you almost like $80,000 more buying power, right? So, you know, when you're buying a home and you're doing conforming loan, so if you're under that conforming loan limit, you're able to put down on a conventional loan as little as 5%, right? So, you know, you can go out and buy a $740,000 house, and before this change, you would have to put down 20% and then have to go through a harder underwrite because your loan is a non-conforming loan because you were over the conforming limit, which used to be $647,200. But now that it's $726,200, once you put down 5%, your loan amount is under that amount, that new conforming loan limit. And so therefore you're able to have your loan based off of, you know, the down payment, lesser amounts, which is, you know, 5% required for conventional, for Fannie and Freddie. And then also, like I said, the underwriting process is a lot easier, a lot more favorable for the buyer, you know, a lot less documentation that's required because you're under the conforming loan limit. So that's a win, you know what I mean? So that allows, obviously with home prices, you know, increasing as quickly as they've been doing over the last couple of years, that just allows for you to be able to, you know, buy a home that's bigger that's catching up with the times of where prices are and not have to put as much money down, which is, like I said, is a win. It's a big win.
It is. Yeah. That's huge news.
Yeah, that's huge. I'm definitely looking forward, to that, because I feel like sometimes you have buyers who have good credit, they're have a good job debt to income wise, but they just don't have, when you're buying a $600,000-$700,000 home, they may not have $150,000 to put down.
That's
what I'm
true.
saying? So, if they're able to put down 5%, which now drops that down maybe to $40,000 or $30,000, whatever the case may be, that just allows for that person to be able to, have a home that they would like, just because they didn't have enough money to put down. So.
Correct. Yeah, that's good news. That's good information right there.
Yeah.
So for anybody that's looking to purchase a $700,000 house, now you can put down as little as 5%.
Correct.
In 2023.
Yeah, and that's non-VA. So VA still, remember, depending on how much entitlement you have, you could be in a position to buy a home at that price point, even above that amount, and not have to put any money down. So this is strictly for your conventional loans that we're talking about.
Correct.
Yeah.
Correct. So another big thing that happened in the news was FHA will now accept private flood insurance. So previously, it used to be where FHA would only allow you to obtain flood insurance with FEMA.
Correct.
And so flood insurance is basically an insurance that covers you when you live in a flood zone.
Yeah.
And FEMA usually determines if there's a flood zone.
Correct.
And so if we look up the property that you're interested in and we determine that that property is in that flood zone, then we will, as the lender, require for you to have flood insurance.
Correct.
And previously with FHA, you only had one option. You had to go to FEMA to get your flood insurance.
Yeah.
And so now you have the ability to get private flood insurance. So if there's a company that's offering flood insurance and the premium is cheaper, you can take advantage of it. So that'll be effective December 21st, 2022, and that's huge as well because you could potentially find lower prices on flood insurance.
Correct. Yeah, and it just, at the end of the day, it gives you more options.
Correct.
Right? It doesn't just limit you to just what FEMA has available. And then, like I said, even with this area that we live in Hampton Roads, I remember I spoke to this person many years ago who actually worked for FEMA, and they said, and they showed me stuff like, this whole Hampton Roads area is in a flood zone, if you really want to be technical about it. It's just that the different severity of where you are is kind of how they determine if flood insurance is really needed or not. Because we're a coastal state, and because where we are compared to the sea level, we actually all are in risk of a flood, no matter where you are. Even if you're not deemed to be in a flood zone, there is a potential for you to get flooded.
Correct.
But it's just the severity of, where you are, in comparison to other folks. So like I said, that is a good win. I can't tell you how many times I've had buyers that I've worked with that, we were doing FHA financing, and then that the flood policy was some astronomical number through FEMA, and it really just killed the deal. Like the person could not afford the home anymore because of how much flood insurance was. And then a lot, like Sophia just said, a lot of times your private policies, they do have more favorable premiums. So it just gives you an option that you just didn't have before, which, like I said, is another win.
Another win.
Yeah. Yep.
Check.
We winning, man. We winning. We winning around here. Yeah.
Now the biggest news that came out. This was huge.
Yeah.
Like this tops the flood insurance. This tops the conventional loan limit. The biggest news is that VHDA, which is the Virginia Housing Development Authority here in Virginia, they have increased their debt to income ratio limit from 45% to 50%.
Yeah.
And I'll let you go ahead and explain what that means.
Yeah. So, like Sophia just mentioned, that's big news. I know, especially for me, and I would even probably say I see most of your things that come through, Sophia. We deal with a lot of first-time home buyers.
We do.
Yeah, most of the folks I would say at least 70% of the folks that I deal with are first-time home buyers. So that's a pretty big chunk of the business that I personally work with. And so what that does now for folks is that, beforehand when you're purchasing a home or getting down payment assistance or closing cost assistance through Virginia Housing, their requirement is that you're a first-time home buyer. There's a home buyer education that you have to complete. And there's also an income limitation, and then there's a debt to income ratio limitation at 45% as well.
And a credit limitation.
And a credit score requirement, I should say. 620 credit score requirement. So what was happening, especially lately with the rise in interest rates, you had a lot of folks who no longer qualified for a certain amount because rates have basically doubled in the last 6 months, right? So a person could have, let's say back in March or April, could have afforded a home that was $300,000, right? What we always mention. But now with the rates that have, since the interest rates have increased, their affordability has dropped down maybe $40,000 or $50,000, and so now they only, not only, but their budget now goes from $300,000 to, let's say, $250,000 or $260,000. And now when you're looking at homes, that's a whole different type of home you're looking at, from $250,000 to $300,000, right? I mean, you're talking about more bedrooms, better neighborhoods, like all of that stuff is factored in that shift, and that all happened because of interest rates being increased over the last 6 months, right? So a lot of folks just deterred. They were deterred. They stopped buying homes. They bought something that they probably really wasn't happy with just because they wanted to buy or they needed to buy a home. But now with this increase in debt to income amount or limit, I should say, from 45 to 50, that adds about another $30,000 to $40,000 back into your buying power. So those same folks that lost that buying power now are gaining pretty much all of it back, if not very close to all of it back. And so that's a huge win, Sure. I mean, that pretty much counteracts the rate increase that we've had, and that just basically puts you back in the same type of situation you were just 6 months ago. So, I mean, I know we have a lot of folks that, I know I've sent out emails, I did some videos about it. Like, I've already had some folks reach out to me inquiring about how does that impact them, people that we've had qualified that have been looking and just kind of like being, like I said, being, a little discouraged about, what they're seeing or what they're able to afford. Now this allows them to afford what they initially thought they were or what they hoped they thought. So, right. I mean, like Sophia said, because of the type of clientele that we typically deal with, I mean, that's a huge win. It's a huge win.
Huge. Yeah. And I know that, there's probably some people out there like, well, what is a debt to income ratio? I mean, like, what does that even mean? So your debt to income ratio is basically we take your gross income, and I think we've actually explained this before.
Correct. We can reemphasize it, though.
Yeah. So we take your gross monthly income. This is the income that is calculated before there's any insurance taken out, any taxes, any deductions from your payroll. So we take that amount and then we divide it by your new possible monthly mortgage payment and the debts that reflect on your credit report.
Yeah.
So that any credit cards that you have, auto loans, personal loans, anything that's reflected on the credit report, and some of your one-offs too. So like your child support, your alimony, things like that. If you're paying those things, we take that and we divide them. And what VHDA used to want it to see was that your debts only accumulated 45% of your income. And so now VHDA is saying, you know what, 45% was a little low.
Yeah. So
we're going to go ahead and allow you to buy, and your debts can now consume 50% of your income, and that should be a livable amount. So you should still be able to survive with all your other obligations and, purchase.
Yeah.
So it's a really, 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 I'm going to keep going, really, really, really great. It's really great news.
Yeah.
It really is. So if you are someone who potentially qualified for VHDA, but it was not in that price range that you felt that you needed to purchase in, reach out to your lender, specifically reach out to us, and we can try to see if, you could potentially get back some of that money that you could qualify for.
Yeah.
We can increase it. You know?
Like, I'm excited, man. Like I said, I already, even though this is my birthday weekend, I'm definitely going to be doing some work this weekend. I'm going to be looking through my pipeline, looking through some of the folks that I've already gotten pre-approved that, are still searching for homes and seeing how this could positively impact them. So, I mean, this is huge. Like I said, I can't understate it. It's a big thing, and I want to make sure that everyone out there does know and understand how that impacts them. So,
correct.
It's good.
Now, on the on another note,
Another note.
we're gonna go high. We were real high.
Yeah.
Now we're gonna go a little low.
Okay.
So on another note, the job report came out. Right? Did you get a chance to take a look at it?
To be honest with you, I did not. I didn't.
Okay, so I glimpsed at it. I'm not
Okay.
gonna lie to you.
Okay.
And so it was projected that jobs would decrease, and they actually have not. You know, so there's a lot more jobs that are available out there. I think it was like 226,000 or something like that.
Wow.
More jobs. So that, in retrospect, is now going to affect the rates.
Correct.
So
So have a negative impact.
yeah, negative impact.
Yeah.
So did you get a chance to look at the Fed rate increase?
Yeah, I did.
Okay, so I did not get a chance to look at that.
Yeah.
So what did you see when you saw that?
So, I mean, well, the Fed bumped it up. So what they've been doing is they've been bumping it up 0.75, right? They've been bumping up 3/4. Now, the next time they're meeting, I believe, is December 12th. So it's not this coming week. It's the week after. It's that Wednesday, Tuesday or Wednesday.
No.
It's like no?
Monday.
Oh, okay, my bad. Yeah.
Yeah.
It's mid-December. I know
Yeah.
that. It's mid-December they're meeting, and they're expected to only hike the rate up 0.5 point this time. So even though that they are hiking the rate up, that's actually looked at as positive news, because with them hiking it up less than what they've been doing the last 4 times they've hiked the Fed rate up, that shows that things are getting better. They're still going to continue to do what they're doing. They're just not going to have to do it as aggressively as they've been doing. So that's good news. So, you know, and also I know the new CPI report is going to come out around that time as well. So I think we'll have a lot of good indication on where we're going to start 2023 here in the next week or two. You know, so I'm hoping that those things go well, have a positive impact in the market, especially with the news that we just discussed as far as the conventional loan limit, and then also with Virginia Housing increasing their debt to income ratio. I mean, that's going to allow a lot more buyers to be able to purchase. And so I'm just hoping that rates don't also, you know, change that, you know, change where we are with the people's affordabilities and what they qualify for.
Exactly. So a lot of great news, a lot of good information.
Yeah.
So that all of that is exciting.
Absolutely.
Yeah. All right, guys. So now it's time for Exercise Your Knowledge. So for anybody that's new, that's just now listening for the very first time, there's a segment where we ask you a mortgage-related question, and we want you to see if you know the answer to the question. So you could either write it down, keep it in your mind, but we want you to, you know, take a try and see if you kind of understand what these terms mean and if you actually know what the difference is.
Yeah.
And if you don't worry, because we will definitely let you know the answer at the later part of the segment.
Yeah.
So today's Exercise Your Knowledge question is, what is the difference between an interest rate and an APR, which means annual percentage rate? So what is the difference between your interest rate and your APR?
It's a good question. I know several times when I'm working with folks, they look on the loan estimate page or they look at the closing costs worksheet and they see interest rate and they see APR. And they don't, they're like, what is that? Yeah, they're like, why is it not the same? Yeah, there you go. Why is it not the same? Like, why is this one that and why is this one that? So, yeah, I think this would be some good information, you know, for folks to understand and know. So when they're looking at those numbers, they know how that impacts them and what it means.
That's correct. So back in 2007 is when I first came into the financial industry. So I started off as a teller. I worked for a big name bank, JP Morgan and Chase. And when you took your training, you know, when you come into like the banking center and you get online, you got to go through all this training. And I remember knowing what an interest rate was, but when I went through the training, I was like, oh, really? It was so shocking to me. I mean, at the time I was only 19, but listen, I was like, okay, all right, I'm ready for this. So ever since then, it was a huge eye opener, and it made me realize that I need to check both. Pretty much.
I got you. That's funny.
All right, guys. So we're gonna go ahead and move on. Today's topic is going to be, what is the difference between a fixed mortgage rate and what is the difference between that and an ARM or variable rate?
Yeah, so that's another conversation we've been having a lot lately. I think most folks probably know just kind of off the verbiage what a fixed rate is. So when you're buying a house, I think we mentioned this before on a previous episode, there's a certain term for the mortgage, right? So the typical term is a 30-year mortgage, which is 360 months.
Which is either, is it a loan or a line?
It's a loan.
Okay,
it's a loan.
because it has a term, right?
Yeah, it has a beginning and end.
Once it's finished, it's done,
Correct,
right?
correct,
I think we talked about that in the last segment,
yeah,
right?
we did. We definitely touched on that last time. So, but yeah, so a fixed rate means that whatever the agreed upon rate was at the time of the commencement of the mortgage or the loan, it's going to be the same the whole time, right? So if you're at 5%, then you'll be at 5% for the full 30 years, right? So that's what fixed rate is. So what an ARM means is an adjustable rate mortgage. So an adjustable rate mortgage, what that is that means that it'll be fixed for a certain period of time, and then after that time has elapsed, then the rate can adjust depending upon where the market is at that particular time. And so, recently, because of the rate environment that we're in, that conversation has come up because you'll have people who are a little bit more savvy or people who kind of understand or, just say, hey, because typically when you have an ARM rate, the ARM rate is going to be less than the fixed rate, right? Because your ARMs are typically like a 3-year ARM, a 5-year ARM, or a 7-year, even a 10-year. That's the longest I've seen is a 10-year ARM.
Yeah.
And so what that means is, like I said, let's say you come to us to try to purchase a home and interest rates are at 6.5, right, for a 30-year fixed.
Correct.
Right? So you know that, hey, I'll have to pay a 6.5 rate for the whole time of my loan unless I refinance later on, right?
Or sell.
Correct. But what you could potentially do is look at where the ARM rates are, because the ARM rate could be at let's say a 5. Let's say a 5, right? Okay. It's at 5%. So you know that obviously at a 5% interest rate, the payment's going to be less, right? But the caveat to that is, like we mentioned, it's only for a limited time, right?
It's an introductory rate.
Yeah, exactly. It's an introductory rate. So you'll have it for, if it's a 3-year ARM or a 5-year ARM or a 7-year ARM, you'll have that lower rate, which will allow you to have a lower payment, for that temporary time. But whatever the market is or wherever the market is at that time of when it adjusts, you're subject to that. So that rate could, jump up or be a lot higher at the time when it adjusts. And you could really have a payment shock. So your payment could be, let's say, at $2,000 a month while you're on that ARM period. And once that rate adjusts, depending on where the market is at that particular time, your payment can go from $2,000 to $3,000 to $2,800. And that's a pretty big payment shock to have, especially when you've established yourself and kind of built your bills and everything around having a payment at $2,000. So a lot of people, depending upon the disparity of where the fixed rate is to the ARM rate, or if they know that they're going to be in the home for a short period of time, a military person say, hey, I got orders there for 3 years and I know I'm not going to be there after that. They may take advantage of the ARM rate, right? Because they know that they're not going to have to worry about when that rate adjusts, especially if they do an ARM that adjusts after when they're supposed to leave, right? Or people who are even going to live there and know they're going to live there for a while, let's say they'll just say, hey, I'll it's a little risky. I'll take the risk on having a 5-year ARM, and then having the rate lower for that 5 years, but I'll just try to refinance whenever the rate's at its most optimal time during that 5-year time frame. So it's a little bit more involved than just kind of getting the rate at the beginning and having it fixed for that 30 years. But, there's some risk involved, but, there could be a reward there as well, depending upon how you execute, securing that ARM rate.
Correct. Yep. Yeah. So, like Bryan said, there's pros and there's cons to having an adjustable rate or a fixed rate or an ARM rate. I mean, they're interchangeably the same.
Correct.
Than your fixed rate. But the most common, to be honest with you, is the fixed rate.
Correct. Yeah, I would say 95% of the loans that we do are fixed rates.
Correct.
I mean, it's just the most secure, because you have that option always to refinance after, that 6-month time frame of when you've established the mortgage. It's always good to say, hey, I know this is what I'm going to expect it's almost like getting a paycheck, right? It's like, hey, I want my paycheck. I know before I start this job, I'm going to get paid X amount of dollars, right? And a lot of people like the security of knowing, hey, every 2 weeks, I'm going to get a certain amount of money, or every time my mortgage comes out, my principal and interest is always going to be the same, right? So there's a lot more peace of mind when it comes to that versus, it possibly adjusting. Who knows what things are going to be 5 years now, right? So a lot of folks don't even know where they're going to be 5 years from now. Correct. As far as professionally, family, whatever, right? So, sometimes it's better just to have that security, but always have that ability to refinance. But it also, like I said, depending upon how savvy you are and how risky you are, there are benefits of doing the ARM rate.
Correct. Yeah. That's correct. And also keep in mind that I think we actually talked about this earlier in one of our very first few episodes, where we talked about the breakdown of what your monthly mortgage is.
Correct.
So you have your principal, interest, taxes, and insurance. So when we say that it's fixed, that means that your interest rate is fixed, and the only part of your payment that's affected is your principal and interest.
Yeah.
Your taxes and your insurance within your monthly payment, if it's escrowed into your monthly payment, those two things can change. So as your value either increases or decreases, but hopefully increases, your taxes can increase. And then, of course, just like your auto insurance works, I mean, I'm pretty sure a majority of the people who are buying a house has either a current car payment or they've purchased one in the past. And typically when you have a car, you got to have auto insurance. And nobody's auto insurance has been exactly the same, dollar for dollar, for a long span of time.
Correct.
So same applies when you're buying a house. Homeowner's insurance can fluctuate, but the fixed amount of your monthly payment is your principal and your interest portion of that payment.
That's right.
So just keep that in mind.
That's right.
All right, guys. So we kind of got a little deep when it came to the fixed rate and the adjustable rate. And now it's time for the answer to exercise your knowledge. I mean, I felt like that was quick this time.
I do. I feel like it was quick too. I mean, but it's honestly, it's pretty straightforward as far as the fixed part, right? So it really wasn't much expounding upon that portion. It was really just diving deeper into what an ARM rate is. I feel like people have probably heard the term before, but didn't necessarily know exactly what it means and how it applies to their mortgage. So, once we broke that down, I think it was pretty straightforward.
Yeah. Then it's in the name, right?
Yeah.
Fixed, I mean.
Yeah.
Adjustable, variable, those are key words, when you're looking at those mortgage terms. I think they try to keep it, pretty reader friendly.
Yeah. Sometimes some of them other acronyms are a little bit tougher.
Like which one? Name one. Can you think of one right off the top of your head?
Let's see. EMD.
Well,
that's kind of that's like a real estate.
Well, that's a little deep. I mean, but
FICO.
But
it's a whole bunch of them.
Okay, so if you looked at earnest money deposit, I feel like in there you might not understand what earnest is, but you'll definitely understand what money and deposit is. So
that's true. I guess I'm just looking at it from the standpoint.
You're gonna look at that and be like, I'm depositing some money somewhere.
There you go. I guess I just look at it. I've had, again, I'm just going off of like conversations. I always feel like I almost have dreams and think about them daily, about conversations I've had with folks over time. And it's always like, what is EMD? What is the AMD? What does that stand for? You know what I mean? So that's why I said, like, if a person who's never bought a home before, they may not know what EMD
that's true.
stands for. So.
What is FICO? I don't even think I know.
I don't even either.
Yeah, I don't think I know
even
what
That's
FICO
what I'm saying.
is.
Yeah, so I know that we talk about all the time because we go off your FICO score. Yeah,
so. I don't even know what those acronyms stand for, but
yeah.
All right, jumping back into it. So the answer to exercise your knowledge, the question to exercise your knowledge originally was, what is the difference between an interest rate and a APR? And APR stands for annual percentage rate. Mm-hmm. So you want to take it or you want me to?
Yeah, I'll say what interest. Yeah, so the interest rate is the amount a lender charges a borrower and is a percentage of the principal of the amount loan. Mm-hmm. So, interest rate is straightforward. It's a number. Hey, it's 5, 6, 7.5, whatever it may be. And once you combine that with the principal amount, that's what it is, your principal and interest, right? So it's strictly that number. It's the amount of finance charge that lending entity is charging you, over time for that loan that you're getting.
That's correct. And so your APR is your interest rate plus any fees that you may be paying.
Correct.
Or any cost associated with the transaction. It's a combination of both.
Correct.
So, for example, if your rate is, let's use that 6.5% right now, and you're paying some sort of fee, whether it's a discount point fee, origination charge. Mm-hmm. I mean, there's some other fees that are associated
underwriting
with you.
fees,
Yeah, with you
credit
purchasing.
report fees.
I mean, you can keep, the list can go forever. But so what they do is they combine those and they come up with the APR. So you may have a rate of 6.5%, but then your APR might be like 7.4 or something, depending on how much in fees you pay. And that APR it will be different for every individual based on what your costs are individually. And your costs are typically, especially like your discount points, they're credit driven. So your cost for your discount points can be different for someone who has an 800 credit score versus someone who has a 630.
Correct.
So
your
APR can be different. But
it's when you're getting a mortgage, I would say 95% of the time, I mean, maybe even more, maybe 99% of the time, like Sophia just mentioned, your APR and interest rate will be different. And also 95 or 99% of the time, the APR will be higher than the actual interest rate itself. Because
it's not unnormal for it to be higher.
Correct. A lot of times I see folks, because maybe they have a credit card and they're always looking what the APR is, like they kind of use that same mentality when it comes to buying a house, and it's not that. So it's, your APR is the fees that are associated with that transaction. So it combines it has the interest rate that's calculated and also has the fees that are associated. So and typically when you're buying a home, there's going to be there's so many layers in buying a home. There's charges that have to be paid, right? There's the lending entity normally is going to charge you for doing the loan, right? We got to pull your credit, so it's going to cost money to do that. Depending upon how strong your credit is, there may be an additional charge because of that, right? Processing the loan, I mean, there may be a charge because of that. The underwriter who underwrites the loan, there may be a charge because of that. So all those fees that are associated with that purchase of that home or that transition of you purchasing that home and that person, the other person on the other side of the transaction selling the home to you, there's fees, right? Just like anything. So, the annual percentage rate takes into account those fees. And the interest rate is strictly just the rate that the lending entity is charging on the money that they're lending you.
Yep. Your APR is going to be your bottom line. So it's required that a lender, especially when you're purchasing a mortgage, that we disclose to you what your APR is on your documentation. You got to know your APR. And, of course, we're going to always disclose your interest rate.
Yep.
Yeah. So I hope that was good information for you guys. I hope you can kind of, now when you're looking and shopping lenders, you take a look at the interest rate, but then you also take a look at what the APR is, because that's going to determine, what that lender is charging you. So if you have a lender that both of them they have a rate of 6.5%, but one's APR is a little higher, then that's gonna give you that light bulb moment where you're saying, indication or light bulb saying like, okay, somebody's charging me a little bit more.
Correct.
So it gives you the opportunity to kind of just read it and know right away that there's a difference.
Correct.
Somewhere.
Yeah.
And it may not reflect in your interest rate.
Correct.
So good information.
Yeah, I think it was a good one.
A good one. Yeah, that was real good, because I'm telling you guys, I remember when I went through training, I was sitting there looking like, okay, plus the fees. What is going on here?
Yeah.
All right, guys. So upcoming, as we mentioned before, it is Bryan's birthday on Sunday.
Yeah. My birthday weekend.
Do you have anything going on? Are you gonna be doing anything this weekend? I mean, obviously you might be surprised, all weekend, but
yeah, we like I said, obviously I was pleasantly surprised this morning for the breakfast. I do know that tomorrow, just me, Brooke, and the kids, we're gonna go out to eat. You know what I mean? So at some point in the evening time, we're gonna go out to eat. We typically try to patronize, restaurants that are local and that are Black owned. So we'll probably either go to, there's a handful of good ones, but I hadn't been to 350 Grace in a while. That's the one that I had the surprise birthday party for Brooke last year at. It's in Norfolk, and it's really, really good food there. My daughter has a seafood allergy, so we got to be really strategic on places that we go and, all of that and exposure and all that stuff. So we'll probably go there, but I think that's the plan. The surprise birthday or surprise breakfast was kind of like the birthday, thing for me. And then, like I said, tomorrow we're going to do that. Tomorrow we're going to decorate a Christmas tree because we did purchase our Christmas tree. That's one thing about it. We always, for Christmas, we always buy a new tree, and so we did that earlier this week. So it's up in our living room, but we haven't decorated it yet. So the kids are anxiously waiting to do that. So this weekend we'll be definitely decorating the tree. And then, like I said, Saturday we'll probably go out to eat. And Sunday, just kind of relax. My kids have their Christmas concert on Sunday, which I always thought was kind of odd, right? Because I was trying to think about doing something actually on my actual birthday because it is on the weekend. But their Christmas concert is Sunday from 3 to 5. So, I'll definitely be there supporting them. Can't wait to see my baby girl. This is her first time actually having to do anything like this at all. So I'm eager to see how she does, if she's going to actually sing or if she's just going to stand there and look like she don't know what's going on. You know what I mean? So, but yeah, that's pretty much the weekend. So I'm looking forward to it. As you get older, it's not, it's not like you're going out to the club and like, at least, for me anyway, I ain't doing that. So, kind of keeping it sticking with the family and friends and enjoying myself.
Listen, during the holidays, we were up in my house late, and I was there like, whew, look, I'm ready to go to bed.
Yeah, I can't believe I used to do, back when I used to, party all the time when I was in my younger 20s and teens. I used to literally, there were times, when I would literally party 5 days out of the week. I'm talking about, when I say party, I'm talking about staying up till 2, 3, 4 o'clock in the morning and then really waking up and then, either having class or having to work a full-time job. And I was doing it like it was nothing. So I couldn't imagine, doing that now.
I used to leave listen.
Uh-oh. Don't tell me yourself.
I used to leave the club because I lived in Miami. And clubs didn't let out till 4.
Yeah, here it was 2. Yeah.
I mean, actually, there were some clubs that went on all night to the next day.
That's what I heard.
But I couldn't hang with those because I didn't do drugs. So
okay.
A lot of those people, a lot of those people was doing something different because I don't see how any human could party for that long.
Yeah, that's wild.
But just doing what I do, which is partake in a little alcohol beverage every now and again. I would leave, go home, change, and then go to work. I don't know how I did it. Or maybe sleep for 5 minutes or 45 minutes. It was crazy. It was real crazy. But
I ain't never do that.
Yeah, nah.
Yeah. I went out that late. I would normally get home.
Well, like you would have been if it was,
I was
given.
in Miami. Yeah, if it was opportunity. Our clubs closed early. Yeah, so we was.
I wasn't given the opportunity to hang out. I
remember the time that I went down. This was 2009. I remember it was me and my boy Carlos. We went down there. It was Memorial Day weekend, and we went to Miami. It was my first time being in Miami. And we went down there partying. And I remember, like you said, the clubs would let out he said 4 o'clock or something. Yeah. So I remember going to the club because we used to go to the club here around 11. You know what I'm saying?
So that was one good thing. So when you go out in Miami, you don't get to the club till 12, 1.
Yeah, that's what I was gonna say. There, I remember one time, the first night we were there, we went to 11. It was dead empty, and we ended up leaving out, went back to our hotel. And then we came back to the same hotel because we gave us risk. They said we can come back or whatever. And at 12:30, 1 o'clock, it was that's when it had just started kicking. And I was tired. I was in the club because I'm so used to it being over, around here at the 2 o'clock hour or whatnot. So a lot of times, even though it was technically supposed to close at 2, a lot of times here they would close earlier than 2, right? So they were either something started or whatever, and around 1:30 they kicking everybody out or whatever. So we was home typically by 2 o'clock, and a lot of times we wouldn't even stay the whole time. We would just end up leaving early depending on the situation or whatever. Correct. But yes, I remember being in Miami that one time, and I was yawning in the club because I was tired. I was just wasn't used to being out that late.
Now, one thing I did not do when I lived there is I could not go and do a beach day or do anything during the day. So if I knew I wanted to go out, I couldn't do both. That was my caveat. Like I can get up and go to work the next day because I've always worked in the banking space. So I mean, I'm not doing physical labor. I'm literally sitting in a chair, maybe greeting some folks. Yeah, I was working with numbers, but I mean that was that just came with it, you know. But there was no way that I could be out and about at the beach or doing whatever comes to mind during the day and then turn around and go out at night. That I wasn't built for.
Yeah, I don't think I ever did that before.
I don't care what age I was. I was, even at the age of 19, 20, I could never do that.
I'll take that back. I did that. I did do that for homecoming. So homecoming, we used to have day parties, and then they would flow into a night party. But every time I did that maybe 2 or 3 times, it was out, man, it was bad. Yeah. So like you said, I mean, I get it. Like
I never could do that. So I had to prepare to go out. It's like I knew mentally that I wasn't doing nothing during the day.
Yeah.
I was just chilling.
Yeah, I got it.
Yeah. And then so tomorrow we're hosting our teammate Laura, she's hosting an event at a Virginia Beach winery. It's on Lynn Haven, 1064 Lynn Haven Parkway in Virginia Beach. So we'll be there tomorrow. I think it starts at 2 to 6. It's $5 wine tasting. So if you do happen to listen to the podcast and you want to come out and support, definitely come out. Bryan has a home buying seminar on Monday with an Onyx agent named Rashida. Yep. On a military base, so that's huge.
Yeah, I'm looking forward to that. That should be cool. Rashida hit me up right before the holiday. I want to say it was like Tuesday, Wednesday before Thanksgiving. Was like, hey, I'm going to be speaking on December 5th at Langley Air Force Base. I think it would be good to have a mortgage purse with me. Do you want to come? And I was like, yeah, why not? Sure. So yeah, we're looking forward to that. I actually have to get like some bagels and stuff for the folks there, so I actually need to go ahead and get that set up today for Monday, so I can just pick that up and roll. But I'm looking forward to it though. I'm trying to think. No, I've been on base before and spoke to folks, but that was a long time ago. That was probably like 10, 11 years ago. So
no. We spoke to somebody last year with Ashley.
True, but was that considered base? I don't think that was considered like base. That was like
that's a training facility. But that's true.
I mean,
that's true. It's a military.
Yeah, that's true.
Yeah, you probably wasn't on like a traditional base. Correct. I mean, it was a military training facility. That's true. So that's true. It would be considered a military base. That's true to a certain extent.
That's true. Yeah. So I'm looking forward to that. I think that'll be a good opportunity. Pretty sure
and Langley is the Air Force Base, right?
Yeah. It's in Hampton. Yeah. I'm pretty sure we'll be talking extensively about VA loans, because most of the folks there, I'm assuming, are military, and so we'll be able to deep dive into that and see if there's any opportunities to discover.
Yeah, we got brunch with a couple agents later in the week. Yep. And then I had to take my dog to the vet. Oh, this dog. Gotta take my dog to the vet. And I think that's pretty much it for the week for me. I mean, we both have, actually, our whole team on December 10th has a home buying seminar that's open up to the public. Yeah. Mine's is that morning from 10 to 12. If you want to come, definitely go and sign up for it. You could get the flyer off of my Facebook and Instagram page. There's a QR code where you can actually sign up. If for some reason you're busy that morning, you can catch Bryan's homebuyer seminar from 1 to 3. Yep. Same location. So we got all bases covered. There we go.
we got for our early folks and for our afternoon folks. Yeah.
And then we're also carrying it over to the other side of the water. We got Laura doing a home buyer seminar over there in one of the Keller Williams real estate offices. So we are, in Newport News. So we are covering all bases that day. If you want to be mortgage educated that day, come out on December 10th. Go to my website. My Instagram and Facebook, Bryan's or Laura's. Yeah. And if you're any type of Snoopy like I am, you'll be able to find us. All right, guys. So, quote of the day, B.
All right. So, the quote of the day is, obstacles are what you see when you take your eye off the goal. Love that one. That one hit hard. So, you always got to keep your eye on the prize, as they say. Keep your eyes on your goal. There will be obstacles along the way, but you should never waver. Keep your eye on that goal, and the obstacles will just be speed bumps to get you where you're trying to go. So, I love that one.
Yep. Stay intact with that small voice. Keep that small voice in the back of your mind motivated.
There you go.
All right, guys. So that's all the time that we have for today. Please follow us on Instagram and Facebook. My Instagram and Facebook is skb_mortgage. Bryan's is B Roy Star. Thank you for listening to our podcast, and we'll see you next week.
See you next week.